What's up, everyone? I hope you're all having a fantastic day today. Now, as we all know, Web3 cryptos are the new wave of cryptocurrencies that focus on making the decentralized vision of Web3 a reality. They combine blockchain technology with smart contracts to give people control over their data and make transactions without relying on third parties. Ripple's Cindy Young shared what crypto and Web3 mean for finance leaders at the CFOC Global Summit. Listen in.
And Web3, in a way, the way I see it is essentially going to, it's just the more evolved, expanded phase of where we live more and more in between those virtual and kind of physical realities enabled by a number of technologies, not even just blockchain, of course. And what we're seeing essentially kind of at Ripple from institutions, again, maybe even 3-4 years ago, it would have been very, very challenging to have a conversation with a very established bank, payment service provider around having a digital asset in your payment flow, talking about benefits. But today we're seeing that is becoming more and more accepted because of all the benefits, right? Because again, I mean, in our solution, we use specifically XRP, which is the digital asset, the native digital asset on the XRP ledger, because we believe it is best suited for this kind of payments solution. And what that allows is for basically payment, the value to be moved almost instantly across the world, everywhere, without having to pre-fund accounts and different currencies in different markets, and therefore locking up capital. And that creates a lot of benefits, not only to, for example, to payment service providers who might be moving money for, migrant workers or small businesses, but as I mentioned, also for corporate treasurers who are looking at that as a way to better manage their working capital and make sure they have the currency where they need it, when they need it.
As always, welcome back to Money Side, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications. That way you don't miss out on our daily crypto news updates. More exciting news today, we've got a tweet from Ripple that shares how 90% of central banks are exploring CBDCs, up from 80% in 2021. This growth has the potential to revolutionize the current financial system. You can find out more about this on Ripple's blog. The solution that digital currencies offer as a distributed payment system can remove the single point of failure aspect from the equation, making the underlying infrastructure more robust, risk-averse, and better positioned for reliability, growth, and efficiency, all while central banks retain sovereignty over monetary policy and currency output. Moving forward, according to a tweet by the House of the Judiciary, recent reports suggest that SEC officials are using off-channel communication platforms to conduct official business and are failing to comply with federal record-keeping statutes. And I agree with what Tom Emmer had to say about this whole saga. Chair Gary Gensler's regime at the SEC has been characterized by regulatory hypocrisy and inconsistency. It's utterly unacceptable that Gary Gensler doesn't hold himself to the same transparent standards that he places on the private sector. John Deaton commented on the same after an of William Hinman responding to a fellow STB partner who had IPO business before CorpFin the same day surfaced. Deaton shared that we can now see why Clayton and Gensler and all of them want to go offline to talk. If it's personal, then use your private phone and email. None of that personal stuff is anyone's business. But if it's about your job duties as a government employee, use your government email. More on today's news, we've got this video that was shared by Riz XRP on Bill Hinman's debacle. Listen to what Tony Edward, Thinking Crypto host, and Lisa Brangaka, the former SEC branch chief, share on this topic.
It's a mess. So it's
yeah, it just seems bad optics. And you also layer in that some whistleblower organizations have done FOIA requests, and it seems that there's ethics violations with Bill Hinman and Ethereum. And I know that's a layer in the Ripple lawsuit, and has been brought up before the SEC enforcement director with members of Congress as well. What are your thoughts on that? Look, we know Bitcoin is not a security. That was I think Jay Clayton, he mentioned that, and Gary Gensler echoes those statements. However, all of a sudden Ethereum was mentioned that it was not a security, and while the other tokens are in limbo. So what do you think happened here with Bill Hinman and that whole debacle?
Boy, that is a tough one. I really don't know how that shakes out in terms of ethics. I think it's always tough when individuals work for the SEC. They can publicly make statements that they always say are only their own statements, that they don't speak for the. But those of us in the securities law area, of course we parse their words. What else do we have to go on when there isn't a regulation? We are constantly trying to figure out which way is the SEC going. How do we advise our clients? So it's a real problem. I think the whole meetings that happened and I really can't comment on the ethics, though. I don't know. I'm glad that, that it's being looked into.
And now as we wind down on today's topic, we've got this tweet from CNBC International, where the new CFTC Commissioner, Caroline D. Pham, talks about how the U.S. needs to put in the work and have better crypto regulations. Caroline D. Pham commented on this tweet, "We must protect customers and ensure strong risk management in the crypto sector. Regulatory clarity will enable growth that is compliant, fair, and responsible." Below is what she shared in an interview with CNBC International.
Getting crypto right is critical at this stage. What are we missing in the big picture?
So I think that around the world, the global U.S. regulators have been working very hard on solving this problem. And you've seen that the Financial Stability Board, in fact, just put out their crypto principles. But what I think that's necessary is in the United States, we really need to put in the work to issue some regulations or some guidance that will provide greater clarity to these markets, not only to protect customers, but also to ensure that any growth in these markets is compliant, fair, and responsible.
Do you think the speculation is now out of the market to a great extent, because we've seen a lot of bankruptcies happen? So a lot of people are saying a cleanup has happened of the cryptocurrency ecosystem. Does that pave way for regulators to think about this in a more rational way? Because earlier on there was this pressure of actually getting ahead of the curve, getting ahead of the market to clamp down on speculative activity. Has there been some ease that's come in on the part of regulators to think about this in a structural way?
I still think that regulators can't fail to act to make sure that we have the right protections in place to ensure market integrity. If anything, I think that the crypto crash really proved that what we saw were failures of risk management, just basic risk management, and also irresponsible business practices. Here at the CFTC, we have a comprehensive regulatory framework that not only requires registration, risk management, minimum financial resource requirements, disclosures, and reporting, and it's really imperative that these crypto activities come within the regulatory perimeter and are subject to comprehensive regulation.
So what can we expect from the CFTC in this regard going forward over the course of the next 12 months as this market settles?
So the CFTC has been on the job policing these markets. We have very robust and strong anti-fraud and anti-manipulation authorities. So we've brought over 60 enforcement actions against crypto abuses, and that's been hundreds of millions of dollars in penalties since about 2015. We're going to continue to do that. We just released our previous enforcement results, which were over $2.5 billion in penalties. So there's no question that the CFTC is on the job and taking a very strong stance against fraud and abuse and manipulation in the crypto markets. But as far as further regulation or further insights, we are a commission of 5 independent commissioners led by a chairman. So I look forward to seeing what the policy agenda might be.
As always, do your own research and always trade safely, guys. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can always let us know what you think in the comment section below, and let's have a conversation. Thank you so very much for watching. Don't forget to like this video, and please click on that subscribe button below and turn on notifications so you get informed whenever we post our amazing content. We'll look forward to seeing you on the next Money Side.